Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 1722A, and today's date is November 21st, 2018, and the title of the episode is, It's Not About Fixing the Fed Economy, It's Much Bigger Than Anyone Thinks. Now, before we get started, we all know the stock market has been on fire lately with the Trump economy. Bob Kudla and the good folks at TradeGeniusAcademy.com are looking to train you on how to weather the storm and make money. Their proprietary algorithms are making their customers insane profits every day with cryptocurrency, binary options, and or ETF stock signals. Here are two trades as an example. Trade Genius Academy is offering 50% off their specials, and any purchase comes with a free 30-minute personal coaching session with the man himself, Bob Kudla. Check out TradeGeniusAcademy.com and tell them that X22 sent you. Let's get into the economic collapse financial news. Now, for those people that are celebrating Thanksgiving, I want to wish everyone a happy Thanksgiving. It's a great time to bring everything down, spend time with your family, and to be thankful and grateful for everything that we have. And once again, for those people that are celebrating Thanksgiving, have a happy Thanksgiving. Now, I wanted to start off with letting everyone know that Q said something very interesting that kind of explains the much, much larger picture of what the real plan is. And it's not about just arresting people. It's just not about saving the economy, saving the Fed economy. It's about restoring the power to the people. And to do this, a lot of things have to happen. It's not about a 4-year run in government and then allowing someone else to come in and allowing them to undo everything that has been done here. So this plan is for the long haul here. And the first part of it, yes, it's making arrests and doing certain things to clean it up. The other part of the plan is really to get rid of what the real problem is, and that is the central bank. And I think this is what Q is leading us up to. And in the very beginning, when Q first came out, it was about the central bank. And I think that had to go on the back burner because there was a lot of other things that Q and Trump team and administration had to get out of the way first. Because it's almost like a football team where you have blockers in the front and you have to get through them so you can get to the quarterback. And you have to go through all these different stages. Well, there's a lot of people, a lot of actors that are blocking the central bank. So you just can't go from here to there. There's many different steps. But as we are watching all of this, we are seeing the entire economic system break down right in front of us. And I believe that this is being done as part of the plan. Because Trump is continually contradicting the Fed. He's not going to stop. Actually, he's probably going to continue with it and accelerate it as we go on. And the mainstream media, economists, financial pundits, we're starting to see all of them say, hey, slow this down, because in the beginning, this was part of the plan, to bring the economy down around Trump and blame it on him. But now the economy is doing well, and the Fed, well, they have the spotlight on them right now. They're the one that everyone is looking at, and they're saying, well, wait a minute, the economy is doing really well, and the Fed is raising rates. We see what is really happening here. The Fed raises rates and things start to break down. If we look at the UMich, we can see that people are starting to say, the economy is not doing that great because I can feel it on the people level. Yeah, maybe the statistical numbers are fine. But UMich kind of explains what is going on here. And UMich starts off with interest rate expectations have always traced the outlines of economic cycles. As expansions lengthen, more consumers would expect interest rate increases, pushing the series to cyclical lows. Then consumers would suddenly reverse course, lowering expectations just as downturns were about to commence. Note that the recession dating lags by about 1 year, meaning that expected declines in rates are recorded about 1 year before the official announcement. While there is no reason to anticipate a sudden change in expectations in the months ahead, consumers have begun to resist rising interest rates on purchases of housing and vehicles. Hopefully this time the Fed will manage interest rates to avoid hitting the threshold that causes widespread postponement, as has been true in the past. Now, they show this graph that every time interest rates move up, we have a recession or a depression, a crash of the system. And then they have to drop the interest rates. So it is starting to show that this is going to be a big problem. Now, what's very interesting is that credit card delinquencies, they are blowing through financial crisis peak at the 4,705 smaller U.S. banks. Now, the bigger banks, they offloaded all these credit cards and they allowed smaller banks to take on the subprime lenders. The big banks didn't want to take them on because they knew eventually what was going to happen. The system was going to come down and it was going to hurt them. And I think their plan was to have all these smaller banks, 4,705 of them, most of them go under, and they would just be acquired by the bigger banks. And this way we'd only have, 5 or 6 financial institutions, a lot easier to control than thousands of them. And I think this was their plan. But what we're seeing right now is that credit card delinquencies, they have shot up to 6.2% in the smaller banks, not so much in the larger banks. What does this mean? This means the everyday person, they are struggling. Is the credit card delinquencies going to bring down the banks? No. What this means is that the everyday person, the subprime people, they cannot pay their credit cards because most of the time these are hooked to about 30% interest. They have late fees and they just keep piling on. And before you know it, your bill, which was maybe $4,000 or $5,000, is now $7,000, and you just can't keep up with it because they just keep piling it on. And that's what we're seeing right now. And this tells us that the consumers have been using their credit cards, and now since the FICO scores, have been readjusted, more people are going to get credit cards, and they're going to get more from these smaller banks. A lot of people are going to be in trouble. They're going to be in a lot of debt, and they're not going to see raises. They're not going to see the help that they really need after they start putting more of the currency on these credit cards. They're going to put themselves further into debt, and all of a sudden, with all these late fees and interest rate hikes and everything else, a lot of people are going to hurt. But this is how the central bank works. They don't want people really to get ahead. They want the majority of the people, and yes, there's certain people that do get ahead, but the mass majority of the people, they are enslaved to debt, and they can never get out of it. Now, we know the central bank, the Fed, they've been raising rates, and I do believe that Powell is working with Trump. We see now, and we've heard from Wall Street Journal, Jim Cramer, CNBC, where they said, hey, maybe we should slow down on the interest rate hikes. Maybe we should pause and wait to see what happens. Well, what's very interesting is that Realtors right now, they are urging the Fed to stop hiking. Well, existing homes right now, they have slumped the most since 2014. They're down 5.1%. Realtors are starting to realize that less and less people are coming out to purchase homes. It's going to get worse. Now we have 2 problems. The housing prices are way too high, and you have interest rates moving up. It throws many, many, many people out of the market. We discussed this before in many, many reports before the Fed even started to raise rates. We knew that this was going to happen. And because of all of this, we see U.S. home refinancing. It has hit an all-time new low, and it's at an 18-year low, which tells you that what the Fed is doing, it is hurting the economy. But we knew this. The economy is in an illusion. It's fake. All this stimulus and everything that they did is fake. All these statistical numbers, GDP, unemployment, stock market, fake. Because all they had to do is raise the rates, and you see the true color of the economy. And that's what we're seeing. Now, the Federal Reserve says they're not going to be swayed by recent stock market declines. I wouldn't expect anything less. I believe that the plan is to move forward, continually raising the rates, nonstop, until what? The system comes down. Now, Trump is out there, and he does what he does best. He's criticizing the Fed. He came out yesterday and said the Federal Reserve is the problem, and the interest rates should not be going higher. He said, I like to see the Fed with a lower interest rate. I think the rate's too high. I think we have much more of a Fed problem than we have a problem with anyone else. Whoa. We have a Fed problem more than a problem with anyone else. Think about that for a second. He's continually out there blaming the Fed. This leads us to Q's post, and I'm only going to read a portion of it. This is 2494. Q just posted this November 20th. And I'll read the rest of it later in the next report. But I believe that this fits into this section, and it reads as follows. This election was not about fixing the economy, trade, borders, military, protecting our children, etc. Also, another corrupt politician or insider can simply undo it with brackets, bold, Band-Aid. This was not simply another 4-year election, but a crossroads in the history of our civilization that will determine whether or not we, the people, all caps, reclaim control over our government. Which means Trump is not in there to fix the Federal Reserve economy, the central bank economy. Trump is not in there, and the Patriots are not in there, to Band-Aid everything that the deep state has done in the past. Trump and the Patriots are in there to reset the entire system. That means the economic system. That means he's there to get rid of the central bank. That means he's there to get rid of the deep state. That means he's there to get rid of the corrupt individuals in government, and that means a reset of government. And that means restoring the power back to the people. The way you do this is you put the people back in control of creating their own currency. So Q is telling us that this plan is much, much larger than anyone thinks. Yes, it's great that people will be arrested, but this is not a Band-Aid fix. This is an all or nothing fix, because as we know, if Trump, the Patriots, they don't succeed in this, guess what? The whole plan is a failure, because someone else will step into the presidency. The deep state, the central bankers, will once again fill those positions, and we'll be back exactly where we were. So this is a much larger plan than anyone has envisioned. And this is not a little tiny fix. This is why when you see tariffs, you see trade coming into question, you see all these different things about the economy. It's not about, oh, let's just fix this little trade problem. This is about resetting the entire economic system, getting rid of everything that brought this country to its knees. That's the bigger plan. That's where we're headed. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.